Hey, Bulls and Bears, back with another dose of economic reality and financial news, economic collapse news, by the way. And yes, there is an economic collapse happening, and many people haven't realized it yet. And it's surprising that a lot of people out there think that this banking crisis that emerged a few weeks ago, they think that's contained, and they think that there's no more fallout to happen here within the banking sector. So very interesting what we're seeing here. We also see the stock market in the green today. The Dow Jones up almost 1 full percent. That's a gain of 327 points. S&P 500 slightly in the green. NASDAQ and Russell 2000 both slightly in the red. But overall, a lot of optimism out there. People thinking nothing's wrong, that the situation's been contained because they were told by the talking heads that everything is contained, that the financial sector is strong, that the banks are strong. And remember, we had these stress tests that came out and said the banks are strong. And we know that the stress test never accounted for higher interest rates. So is there a surprise that things are unfolding now much differently than what people expected? Well, we were told that inflation was temporary or transitory. We were told back in 2008 that the subprime crisis had been contained. We were told a lot of things that turned out to be completely the opposite or completely false. So anyone sitting back and thinking that this crisis has been resolved, think again. I think, in fact, we're only in like the first or second inning, if you want to look at the financial crisis in a 9-inning ball game. Right, but let's get into some news here. McDonald's laying off corporate workers. We've got oil prices are going to go back up over $100, in my opinion. We had a big surge here today because OPEC nations announcing a big cut in oil production. And that's one stock that I haven't sold is my energy stocks. One, they pay dividends, and two, these companies will do what they need to do to keep their profits elevated, to keep the price of oil from collapsing. I remember in 2020, I bought, was it Exxon for around $40. And the last time I checked, it was like 120, maybe 130. So that was a nice investment. And I probably wouldn't add to my energy stocks until there's some sort of other collapse or massive sell-off in the price of oil, therefore a sell-off in the companies as well. So that's one stock that I'm holding. For those of you that do trading, I'm sure that you're probably doing the same, holding energy stocks for the long term. There's not too many stocks I hold long term. Mining companies, mining stocks related to precious metals, energy stocks definitely, especially ones that pay dividends, but not too much else besides that in the stock market. All right, but let's talk about what's going on with McDonald's. Now, we know that layoffs has been just a huge part of the news here with the financial sector and with this economy. And now McDonald's is no exception. McDonald's, I haven't eaten at McDonald's in a long time. In fact, the last time I went to eat at McDonald's, I was buying a milkshake for one of my sons. And we got stuck in the drive-thru. You know when you pull in the drive-thru and there's like cement on the side, or there's an edge or railing and you can't get out. So if you forget your wallet or you find out the shake machine's broke, you're stuck and you can't back up if cars pull in behind you. So now you got to sit there. So that's a feeling that I really don't like, being stuck. And you have to wait for the people in front of you to order, and it's taking forever. So I get through the window, and she's like, "Oh, you didn't order anything?" And I'm like, "Well, I did, but you didn't have it. The shake machine's broken." So now I'm just sitting here. I'm like, "Do I get free food for my inconvenience?" She's like, "Oh, let me check. I don't think so." But I was like, "Don't worry about it. I'm just kidding." So that's the last time I went to McDonald's. Anyways, enough of that. Let's talk about the layoffs here at McDonald's. And McDonald's temporarily shut down their corporate offices. These are going to be corporate layoffs. And to me, that's always interesting. If we're not seeing a lot of locations close down, how are they able to lay off so many executives or people in the corporate office, right? Why are these people hired if they're not needed, or if the company could still operate with laying them off? Over the past year, tech companies have been reducing their workforce, and now this trend continues and extending now to the U.S. food sector. This is out of the Wall Street Journal. Fast food giant McDonald's Corporation is preparing to notify its corporate staff about layoffs early this week. So it's interesting. Some of these companies, we're seeing more corporate staff get laid off than frontline workers or people on the cash register, for example. Not always, but in some cases, that's what we've seen. Now, remember a couple months ago, actually, I believe it was maybe January, late January, we talked about how McDonald's was seeing lower income customers ordering a lot less food items. And because of that, they were having to increase their prices because of just overall inflation, energy costs, the demand for higher wages because of high cost of living. and they said they were going to increase their menu prices very slowly to not try to affect the customers or not to try to shock the customers is what they said. But yeah, this is what's happening now. So, thought the economy was booming. Why are we seeing McDonald's lay people off? One of the places where people can get a low-priced meal, um, maybe not very a healthy meal, but it's a low-priced meal. And I haven't checked. Do they have a dollar menu? I'd have to check at my McDonald's here. But so somebody needs to call McDonald's and say, "Hey, haven't you heard the economy's booming? Why are you laying people off?" Right? Maybe they haven't read the news, or maybe they haven't seen the headlines, or maybe they haven't heard our leader get up there, because the leader of the country right now is saying the economy's booming, that everything's fine. So maybe they didn't see the speech. Maybe they didn't see it. Maybe they need to tune into the speech so they know what's going on. All right, so on to the next bit of news here: oil prices. OPEC nations cutting oil. Saudi Arabia announced they're going to implement a 500,000 barrel a day cut starting in May. And other nations also, the OPEC nations, many of them also cutting. It's going to be a total of 1 million barrels a day that they're cutting. And just like I predicted back in the fall, I said when prices were down, I said get ready, because summer 2023, prices are going to go back up. This is what happens a lot of times. These companies will cut production. Also, so many other factors in play here. You would think with the consumer being so deep in debt that you would see less traveling and less demand, and therefore falling oil prices, but it's just the opposite. So this is not good. When people need relief at the pump, people are buried under so much debt right now. They need relief somewhere. So here's another area where you're not going to see price deflation. You're going to see inflation. And I'll be shocked if it's not $100 a barrel again this summer. Now, something crazy could happen, like something that we saw like in 2020 where prices crashed after the health crisis emerged. Something like that could happen again. Some unforeseen event, something could jump out of the woods here at us, jump out of the shadows. Other than that, though, I'm thinking at least $100 plus, probably $120, $130 a barrel if I had to put a guess on it here. But the question is, how long will the consumer remain solvent? How long can people keep filling up their gas pumps? And now we're supposedly in a credit crunch where banks are going to be more strict on credit. So what's going to happen if banks start dropping these credit limits because of the bank insolvencies, because of the credit crunch that's happening? Considering credit cards are a lifeline for so many people, if you take away credit cards right now, economic activity would come to a screeching halt. Basically, the economy would stop, and you would see Mad Max overnight. So it'd be very interesting to see what would happen if these credit card companies did have to drastically drop these credit ceilings or credit limits and reduce the issuance of new cards because of the credit crunch, right? That could really lead to a lot of economic turmoil and likely even social unrest here in the United States if that were to happen. And actually, just in the past few weeks here, we saw the price go from about 70, I think it even got below 70 there briefly, up to now today over $80. So a $10 increase in just a few weeks. So that tells you how quickly things could change. So I wouldn't be shocked at all to see $100 plus by June here, coming up in just a few months. Other news here: U.S. manufacturing activity nears a 3-year low. A 3-year low. Wait, again, this doesn't make sense. I thought the consumer was strong, the economy was booming. Out of Reuters, U.S. manufacturing activity slumped to the lowest level in nearly 3 years in March as new orders plunged, and activity could decline further amid tightening credit conditions. Wow. So things are already dropping, the lowest level in 3 years for manufacturing, and we haven't even seen the impact of tighter credit yet. So what's this going to look like in a few months, folks? You let me know. To me, it looks like a disaster, and I've always said, this is a disaster unfolding very slowly, a slow motion economic collapse. And to me, it looks like it's only going to accelerate from here. I mean, what's going to bring us back from the abyss here? I guess one area that could help people is we've got federal regulators out there wanting to put new limits on late fees for credit cards. This is out of NPR. Miss a credit card payment? Federal regulators want to put new limits on late fees. Recent article here. So again, if everyone was fine, if the consumer was strong, why are they looking to cap limits or have new limits set on late fees for credit cards? If everyone's doing fine, why do we need that? Why do we need to have the student loans not be able to make their student loan payments? Why do we have to have that put in place? The freezing of the payments. Why do we have to have eviction moratoriums? Why do we have to have foreclosure moratoriums? Right, all these blanket rescue packages. Why do we need those if the consumer is really strong, folks? The Even the blind are beginning to see what's going on here. Even Stevie Wonder can see what's going on here now. So funny. I mean, I'm joking, but I'm not joking because it's a serious thing. Anyone think that this economy is not collapsing is kidding themselves, right? The big question is, what type of collapse is it going to be? Is it going to be inflationary? Well, if it's going to be inflationary, they're going to have to loosen the credit guidelines, because in an economy based on people borrowing money, where 70% of your production or 70% of your economic activity is people spending money on goods and services, known as consumer spending, well, that's not good if credit is tightening. So they're going to have to loosen credit guidelines. And what are they going to have to do? Well, they're likely going to have to nationalize all banks, give a guaranteed backing to all the banks, all the depositors. So it's going to have to be trillions of more dollars that are going to have to be flooded into the system here, into the economy, for that to happen. So it's wild times, folks. So I hope you guys enjoyed this news. Hope you guys like this update here. We're going to keep an eye on the markets for you, the economy, the financial crisis that's unfolding. So please come back for more. Give us a thumbs up if you like what we talk about to help us stay alive. Keep stacking, and we'll talk to you down in the comments on this one. Bye for now.